Silver is a much easier market for the bullion banks and the central banks to control because it's a smaller market. I think they're running out of rope because there's a lot of physical, real demand for silver from China, India, and other countries. And eventually they'll have to cover these massive short paper positions that they're trying to defend right now is around 32.50 or even 33. I think we almost touched 33 a week or 10 days ago. I do expect eventually silver to outperform gold.
Central banks remain active buyers of gold as they seek to diversify their reserves for financial and strategic reasons. This elevated demand has supported gold prices, particularly when global interest rates were high during 2022 and 2023. According to the World Gold Council, central banks acquired 1,037 tons of gold in 2023, just shy of the record 1,082 tons purchased in 2022. Major contributors like China and Poland have driven global reserves to 36,700 tons, with over 25% of gold accumulated since 2010 acquired in the past 2 years. This trend appears to continue into 2024, as evidenced by the acquisition of 483 tons in the first half of the year. While gold continues to hold its status as a primary investment, silver is increasingly recognized as a compelling option. Mario Innecco points out that the silver market, historically susceptible to manipulation due to its smaller size, is currently experiencing a notable surge in physical demand from countries such as China and India. This increase in demand is leading to supply constraints, complicating efforts for investors trying to maintain short positions and suppress prices. Recent attempts to stabilize silver prices within the $32.50 to $33.00 range highlight the ongoing challenges of market manipulation, prompting analysts to predict an imminent breakout. This potential shift suggests that the current pressures on the market could lead to a significant price increase soon. Innecco also references historical instances of price suppression, such as in the 1970s, when allegations emerged about collusion between central banks to keep gold prices low. He cites a notable meeting between then Federal Reserve Chairman Paul Volcker and Vatican Treasury officials, suggesting that such interventions may have exacerbated price declines, even though gold eventually rebounded to reach new highs. Innecco predicts a significant breakout for silver, citing technical indicators that suggest a price surge is imminent. He underscores the importance of tracking the money supply, M1 and M2, as key inflation indicators, which are expected to drive up prices for both gold and silver soon. We present the clips of Mario Innecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Since 2022, if you remember, 2022 was a record amount of net buying for central banks ever since the Bretton Woods Agreement in the 40s. And last year it was almost the same amount. And it's not just BRICS nations. You've had countries like Poland and other countries that are not in BRICS buying a lot of gold because they see the writing on the wall. I think that people are concerned leaving their reserves with the U.S. or with Europe. It might be frozen or confiscated. And as I said earlier, Russia, they're up to like 31.5% of their reserves in gold. And it looks like the target is going to be 40. So I think they're going to have to keep buying gold. And don't forget, these reserves always change depending on international trade. So I don't think it's going to stop. And I think eventually countries in the West are going to have to catch up as well. So I don't see any slowing down in the purchasing of gold. But I think, the price has been driven more by the central banking sector. The consumer, the retail market in the West is not that strong, even though we're seeing anecdotal evidence, some proof or maybe some stories that show that people are starting to wake up, like they're selling gold at Costco now and that they're running out of gold. So yeah, I think there's still a lot to see in the gold space, especially on the retail side, not just in North America but also in Europe. And if you add that to the central banking buying that I think is going to continue, yeah, we're just in the beginning, I think, Elijah, of this gold bull market. I think they're running out of rope because there's a lot of physical, real demand for silver from China, India, and other countries. And eventually they'll have to cover these massive short paper positions. But the level that they're trying to defend right now is around 32.50 or even 33. I think we almost touched 33 a week or 10 days ago. Yeah, I do expect eventually silver to outperform gold. But you need to remember that silver will be a lot more volatile on the way up and down.
The BRICS alliance is gaining significant momentum, with many countries interested in joining its ranks. Russian President Vladimir Putin has noted that up to 34 nations are considering membership. As BRICS countries accumulate gold reserves at unprecedented levels, speculation is mounting about the potential creation of a gold-backed currency. This trend is not limited to BRICS members. Countries like Poland are also ramping up their gold purchases, due to concerns that reserves held in Western institutions may be subject to freezing or confiscation amid geopolitical tensions. In 2022, central bank gold purchases reached historic levels, marking the highest annual total since the Bretton Woods era. This highlights the growing desire among nations to diversify their reserves and reduce reliance on the US dollar. Mario Innecco further explains that gold is not only appreciating against the US dollar, but also gaining value relative to other major currencies, including the euro, British pound, and Japanese yen. He argues that countries can use gold to settle trade and extinguish debt in a gold-backed system, a crucial detail often overlooked. Unlike fiat currencies, which can perpetuate debt and inflation, gold and silver are tangible assets that serve to truly settle financial obligations, reinforcing their appeal as viable alternatives in a shifting economic landscape.
I think they will announce something. I'm not sure it's a currency. It's just a trade settlement mechanism. They're going to call it, I think, the unit. And it will be 40% gold-backed. That's the plan. And 60% backed by fiat currencies, i.e. if a country has 40% of their reserves in gold, they'll have the other 60 in different currencies. And I think there's a limit to how much you can have of the other currencies. I think they will announce something. Whether it's going to be up and running very soon is another question. But I've noticed that the trade amongst the BRICS plus countries is less than, I think, 35 or 30% in dollars and euros now. So it's growing, it's moving that way. And the reason they're using gold is because they're not going to use the dollar. And the only thing really that you can trust as a monetary reserve is gold. I mean, people have been fooled for the last 50 years into thinking that dollars and U.S. treasuries are safe. I think that's the whole problem here, is that people are going to realize they're going to realize the most powerful countries outside the West. Well, if they're going to go for an alternative, they're going to go for gold, and I think that's going to wake humanity up to how important gold is as a monetary asset. It's already doing so, even though gold is going up not just in dollars, but also in euros, British pounds, in Japanese yen. I mean, Japanese yen, we're almost at 400,000 yen per troy ounce. And even in the own BRICS fiat currencies, it's going up. I saw a report from the Jerusalem Post the other day that Russia has 31.5% of its reserves now in gold, and I think that's going to keep growing. Oh yeah, it will definitely be a problem for the West, for government bond markets, not just U.S. Treasuries, but UK gilts and European government bond markets. These countries, they're not gonna. Yeah, they will not buy as many Western treasuries and government bonds as they normally would have if they weren't going into a gold-backed system. And that's going to put pressure on bond yields. And we've seen bond yields rise ever since the Fed cut rates on September 18th. It might be a little bit of the market saying the Fed is done too much in terms of cutting the things. Inflation's still pretty strong. But I think it's also to do with the fact that there will be a lot less demand for our paper, which, as you know, is you can't pay off fiat currency. The only way to retire fiat currency is to issue more and more debt. In a gold-backed system, they'll be able to settle trade, extinguish debt with gold. That's what people don't realize, that with gold and silver as well, you can extinguish debt. That's how you pay a debt. Someone comes with a promissory note or a fiat currency, and you give them the gold and silver, and you've settled the debt.
Silver is positioned for significant growth as it has successfully retested the upper boundary of its expanding consolidation pattern from May to September 2024, indicating a bullish breakout. By maintaining its primary uptrend and benefiting from a positive correlation with gold, silver is set to capitalize on this momentum. Do you agree with Mario's predictions and analysis? Please share your thoughts on the video. Also, ensure you like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks for watching, and we hope to see you in the next one.